Good day. Jeffrey Friedman, Senior Commodity Broker, RJO Futures, with my comments on stock index futures. Today, Friday, January 10th, so it's only the second week, really, of the new year. A little background, stock market index futures were up 30% looking at the S&P front month. And so we had a big year last year. We're starting off this year with a little pullback, but the charts are up and in an uptrend. Let's look at the word of the day. I always give you the word of the day. The word of the day is employment. Okay? Disappointment employment. We had non-farm payroll. We were looking for 200,000, creating new jobs. And what did we get? We got less than 50. Very big disappointment. And even if we got a little better than 50, 60, 70, we got less than half of the estimate, okay? So stock market index futures like the S&P March contract was up about 7 or 8 when that report was released. We went right down to unchanged to slightly negative, and then we rallied back. We're slightly above, maybe 3 points. Have said all that, you can see it's a little choppy. How do you interpret a weak unemployment report? Well, you could say that the economy is not as strong as we thought, and then you go back to the Fed. The Fed, we had minutes this week alone that lowered the unemployment rate for when they would be tightening. So it looks like they won't be tightening in the first, second, or even the third quarter of this year, 2014. Have said that, though, we are looking at how fast they will taper their quantitative easing buying bond program. We went from $85 billion to 75 per month. We might be going to 65 or 55, but not until the employment situation gets better than what we saw today. Was this because of weather? We don't know. So is this creating a trend in the employment situation? We don't know. Looking at the unemployment rate, under 7%, we did downtick. Does that mean that people are getting jobs, or does that mean that they're not looking anymore and not part of that evaluation, if you will? Now, that is probably the highlight of the fundamental news right now. Let's take a look at the technicals very quickly, okay? We'll use the S&P March contract because it's the most participating stock index future in volume, and it has the broadest base of our economy stock index futures. Now, have said all that, we're trading around 3 points up. We're down about 0.5% for the year. It's only been 2 weeks. No big change. We are definitely in an uptrend, short term, medium, and long term, okay? My target, the big target, 1880 in the March contract. We do have some resistance around 1840, and of course, a close under 1810. 1810, in my opinion, looking at the charts, would be a negative and put the bears slightly in control. What would change the trend, though, short term and medium term, would be a close under 1788, okay, on a closing basis. And then we would have a short-term trend change, not a long-term weekly trend change. So remember always, trading futures or option to futures involves risk of loss, is not suitable for all investors. You should be contacting me and we can discuss any market you want. Good luck and good trading, and Happy New Year.